action limits. For
disclaimer: the content is for entertainment informational purposes only. Will aim to use reliable sources. Viewers should be conduct their own research and not rely solely on this information. We are not liable for any inaccuracies or damages arising for its use. All that party content falls under fair use provisions of Section 107 of the Copyright Act of 1976. Got that?
Imagine a bank where you could open an account under a fake name, no ID, no transaction limits.
Koniko is Sweden. Fake name, fake everything. What?
For criminals, tax evaders, and anyone seeking to hide their wealth, this wasn't a fantasy. It was reality at Charterhouse Bank. Through its shadowy operations, billions flowed through hidden accounts, enabling some of the largest corporations like Nakumatt and Tuskys to dodge taxes.
Hizi ni mbili zilianguka. Zilianguka kwa sababu ya hii nini?
At their peak, SportPesa was the fastest money laundering and most visibly international brand in Kenya's history. From sponsoring Premier League sides tied to powerful figures like John Arun Mwau added a darker edge to the scandal. By the time the full extent of the bank's misdeeds came to light, even the US ambassador estimated the damage at 60 billion shillings lost through financial malpractice at Charterhouse. In this episode, we'll uncover how a relatively small bank holding less than 1% of Kenya's market share became central to one of the country's largest financial.
Obviously, bank hizi funguliwa kwa anybody, nilikuwa nasema jana. Hizi kwa imefunguliwa for anybody. Hii sasa ni the cream of the cream. Niko na najua mtu cheaper. Bugi ya najua mtu cheaper, najua uko na connections, mimi sina connections. Uko na connections.
Scandals of money laundering and tax evasion, even attracting the attention of the FBI.
If you attract the attention of the FBI, you know you messed up. Hapo ndo unajua umemess.
Be sure to like the video if you enjoy it and subscribe to the channel for more stories from Kenya. Charterhouse Bank's story began in 1996 when it took over operations of Middle East Kenya Finance Limited, officially becoming a full-fledged bank in 1998. From its inception,
Miskumbuki bank. What? 1988.
Charterhouse catered to Kenya's wealthiest individuals and corporations. For those seeking a discreet way to move vast sums of money away from watchful eyes of the Kenya Revenue Authority or the Central Bank of Kenya, Charterhouse Bank was the ultimate partner. A key player in the bank's ownership was Ram Trust, which held a majority stake. Ram Trust was the parent company for several businesses, including Kingsway Tires, Charterhouse Bank, Creative Innovation, and Village Market.
Designer the same.
Including Kingsway Tires, Charterhouse Bank, Creative Innovation, and Village Market, making it integral to the bank's operations. But Charterhouse's most pivotal relationship was with Nakumatt. 8 out of Charterhouse's bank's 10 branches were strategically placed inside Nakumatt stores. On the surface, this setup seemed like a customer convenience, but it served a more calculated purpose. Through its connection with Charterhouse Bank, Nakumatt allegedly underreported its revenues, evading billions in taxes. The numbers painted a shocking picture.
What?
Nakumatt alone paid 10 times less of VAT than its struggling competitor, Uchumi. All this was enabled by Nakumatt also having partial ownership in Charterhouse Bank. The situation was further complicated by John Arun Mwau, who held a 7.7 stake in Nakumatt through his company Hotnet. According to the US Embassy reports, Hotnet was also linked to William Kabogo, another stakeholder in the retail chain.
Mafia.
Both Mwau and Kabogo faced allegations of involvement in trafficking narcotics and money laundering.
Under investigation with drug trafficking are Hassan Joho, Aaron Mwau, William Kabogo, Mbube Sonko, Saitoti. Umesikiza majina zimetajwa hapo? Umezisikia majina?
Activities specifically related to the funding of the 2005 referendum campaign for the NARC coalition. Whistleblowers also claimed that Mwau and Kabogo had interests in Charterhouse Bank,
Loki jamaa anahanga tu mafia. Cheki tu. Anakaule mjama kijiji anasimamanga tu hivi mnakiskata.
Using proxies to conceal their stakes. Charterhouse Bank's first major scandal emerged in 2001, centered around a dormant company called Crucial Properties.
Hawa sasa walikuwa wanafanya hii biashara aje. Hii ile story fulani niliona ilikuwa movie ya India ngapi. Wanaenda kwa kaburi wanachukua majina za watu, hizo majina wanachukua kwa social security numbers zao na vitu zao zote, wanaenda wana register banks nao. Lakini sasa unapata wewe ukana like 100 people wenye wote wako worth 50 million. 50 million times 100 people ni pesa ngapi? Bilioni moja times it by how many ever people there are there.
The company, owned by Humphrey Karaoke, famous for his high-profile properties like the Hub Karen and Fairmont Mount Kenya Safari Club, deposited an eye-watering 2 billion shillings into its account. The funds originated from Liechtenstein, immediately raising red flags at the CBK and drawing...
Exactly. Ati atoe 2 billion atoe wapi? Kwenye sasa pesa inasafiri red flag.
The attention of the FBI. To grasp the sheer scale of this sum, if you had 1 billion in 201 and spent 100,000 shillings every single day, you'd still have over 100 million left in 2024. The CBK suspected that these funds were linked to criminal activities. However, Humphrey Karaoke claimed that the money was a legitimate loan meant for property investments. The investigation stalled when a court lifted the freeze order on the account as investigations took too long. Within hours, nearly the entire 2 billion was withdrawn from the account, leaving just 15 million behind. With the money gone, the investigation effectively ended. In 2003, Peter Odhiambo, a former Barclays auditor who had just joined Charterhouse Bank as an internal auditor, began his role with routine tasks of reviewing the bank's financial records. From the moment he began going over its books, Odhiambo immediately sensed something was amiss. At first, the irregularities seemed subtle. Accounts missing proper documentation and transactions that seemed deliberately concealed from regulators. However, as he dug deeper, the extent of the financial misdeeds became undeniable. Charterhouse was not just a bank. It had become a gateway for billions of shillings in tax evasion and money laundering. In 2005, Odhiambo presented his evidence to the CBK governor, Andrew Mulei, prompting the formation of a joint task force with the Kenya Revenue Authority and Kenya Anti-Corruption Commission. Their investigation uncovered that Charterhouse was costing Kenya billions annually in lost taxes. He uncovered 85 secret accounts that were moving a staggering 20 billion annually. These accounts were being used by high-profile clients to hide significant sums of money from the tax authorities. Nakumatt, the dominant supermarket chain in Kenya, was one of the most prominent clients. Despite reporting no profits for 6 consecutive years, Nakumatt had managed to evade 18 billion shillings in taxes by concealing its revenue in secret accounts. It funneled over 1.25 billion through shadowy networks using accounts linked to companies like Fresh and Juicy. Tuskys, another large supermarket chain, was also involved through its parent company, Tusker Mattresses, which held 75 accounts that shielded 4.3 billion in undeclared revenue.
75 personal accounts. Hii ni majina tu unapatanga tu ni na random company, random bank account iko na random name. iko na 15 million, unashinda 15 million kwani ya guzi, kwani 15 million haimwashi iko hapo.
Furthermore, W.E. Tilly, a company involved in fish export, had reported only its Kenyan sales while secretly hiding 5.9 billion in credits from operations in Tanzania and beyond. W.E. Tilly will later become embroiled in the collapse of Imperial Bank, but that's a story for another video.
Okay.
The scandal also implicated Triton Petroleum. Known for its involvement in the 7.6 billion fuel scandal, Triton Petroleum
hizi makampuni zinatajwa hapo hivi hapo uko ndo pesa za Kenya zote ziko. Yenyewe mimi niko informed
Petroleum funneled large sums, including a mysterious 50 million shilling transfer into accounts belonging to one Sonal Devani, using incomplete documentation and no account opening forms. The bank repeatedly flouted regulations, particularly the Banking Act's single borrower limit, by lending amounts far beyond the allowed 25% of its core capital to its favored clients. Nakumatt was one of the biggest beneficiaries of these loans, with the internal management even issuing unsecured loans to themselves at no interests.
Okay.
Accounts
anachukua loan alafu waiki interest alafu anakula yote. Ama hivyo ndo anachukua hiyo pesa inapeanwa huku alafu anajichukulia kama loan.
Were riddled with fictitious details, transactions were split to evade detection, and enormous cash deposits and withdrawals went unverified. Notably, a handful of accounts stood out. Sailesh Prajapati, for example, processed over 2.2 billion in cash transactions over a period of just 5 years. Odyssey's enterprise, with no discernible commercial activity, cycled on 1 billion in deposits and withdrawals within just 10 months.
Turn on my chart. What?
The scandal
been in the building for a long time. Nasija notice hadi. Alright man, talk to me. Twitch overlay, Twitch overlay. Not this one. Sorry man, I'm being focused on these things. The monies that are being
was not confined to Kenya. It had international implications as well. Among the most suspicious accounts were those linked to Italian businessman Paolo Santanino.
Who?
These accounts had been opened without proper documentation and were structured to evade scrutiny, with transfers being kept under $10,000 and laden with falsified
10,000 USD. Hizo raise flags because this is 10,000 imetoka wapi? Watu wanatuma 999
details to cover their tracks. Charterhouse's leadership was also deeply involved in the scandal. Kingsway Motor Group processed billions of shillings through questionable transactions. One of the most notable figures tied to Charterhouse Bank was John Harun Mwau, a powerful businessman and politician, was later designated as a
unajua watu wale villains wa movie wanatu sura kwa zile suspicious
global narcotics kingpin by the US government. Mwau's operations allegedly included laundering drug money through Charterhouse Bank, as well as evading import duties on goods that were smuggled into Kenya and sold through Nakumatt supermarkets.
Okay.
At the time,
shares za kumatia dodo yake ilikuwa anatengeneza mingi. Nilijua tu, they cannot be a billionaire in the right way.
Mwau was one of the top importers of electronics and other goods. Among his more notorious holdings was Pepe Enterprises, a shipping container depot believed to be a major transit point for narcotics. However, Mwau denied all these allegations and even sued the Nation Media Group for defamation for linking him to narcotics trafficking and tax evasion.
The young people or children who are reading newspaper today at the age of 8, 9, 10, and they are seeing my name or my picture in the television saying that I'm a drug peddler. Even when they are 30 years, 20 years from today, they will be viewing me as such.
Honestly, we do not care about you.
The house must protect my integrity and those of others.
He was later cleared as there was no evidence to confirm the claims.
Upon the completion of the investigation, it was confirmed that the Honorable Mwao has never been linked to narcotic drugs trafficking.
Just because he hasn't never been linked doesn't mean it didn't
With
happen,
mounting evidence
allegedly.
of the extent of money laundering and tax evasion facilitated by Charterhouse Bank, Governor Andrew Mulay took decisive action. In 2006, he recommended the bank's license be revoked. Writing to Finance Minister Amos Kimunya, Mulay emphasized the severity of the bank's non-compliance and its role in enabling widespread financial crimes. His recommendation was based on the findings of his internal investigation, which had uncovered shocking evidence of illegal activities. However, the response to Mulay's report was not expected. Within 2 days of his recommendation to close the bank, Mulay was arrested and suspended as CBK governor. The charges against him were related to nepotism, specifically hiring his son as a consultant in the investigation task force with a $36,000 contract to assist in the investigation. A leaked WikiLeaks letter from one of the 4 consultants suggested that the arrest...
So nepotism is illegal in Kenya? Okay. That is a very interesting fact to know. Because the way things were going, I have no idea that it was illegal. It is illegal. Interesting.
Was a deliberate attempt to derail their investigations into Charterhouse.
See, I have a theory on what happened. First of all, when I investigate the creme de la creme of the country, the high table sitters, wajaribu expose, number 1. Number 2, there's no way wao say wanakubali kukalie top seats kama hawana data on you. So if you don't play ball, they know how to get you. Number 3, why would you do that knowingly? Tunataka kutengeneza, wanataka kupatia kijana yako connections. Na kitu yenye ni clear itaonekana hata kama utajaribu kuficha kuna venye lazima tunini. Number 4, since it happened that this guy they had data on this guy, since they had data on this guy, hakuna wenye wangemwachilia afanye nini. Juu unasikia pesa sasa zinapotea 18 billion kwa mtu mmoja. Sasa imagine wenye tujui. They always have data on somebody. You can't sit in high places without people not knowing that on you.
Noted that his son was highly qualified with a strong financial background, and that nepotism charges, although not to be condoned, were trivial in comparison to the massive financial crimes that had been uncovered. The timing of Mulay's suspension was also suspect. Under the CBK Act, the governor could only be dismissed if convicted of a crime or by an order from the president.
See how convenient it is? Conviction of a crime or a president. Lakini kuna venye hiyo time niko sure nani kwa ngako ameingiza kwa hizi deals. When was this? And Kibaki ndo alikuwa president this time. Aka ameingiza ngoni hizi mangori mambo mingi. So it's convenient that the one crime that can be convicted of, that is suspended of, is found.
Neither of these conditions were met in Mulay's case, raising suspicion that the arrest was politically motivated, aimed at halting investigation into Charterhouse Bank. Meanwhile, Peter Odhiambo, the internal auditor who had blown the whistle on the scandal, faced in significant tax evasion and money laundering activities. In June 2006, amid growing pressure and heightened scrutiny, the Central Bank of Kenya placed Charterhouse Bank under statutory management. The move effectively froze the bank's operations, and investigations into its illicit dealings were launched officially. At the time of its closure, Charterhouse Bank had around $3 billion in assets and around 4,600 deposit accounts. The Charterhouse saga took an even darker turn in September 2006 when a mysterious fire broke out at the bank's Nairobi offices.
Mysterious.
The flames destroyed critical documents, many of which were believed to hold the key to unraveling the full scope of the bank's illegal activities. Investigators couldn't ignore the timing. It came months into the deepening investigation. The auditors later confirmed the fire's devastating impact, explaining that the destruction of the records significantly hindered their ability to trace the flow of illicit funds.
Convenient.
This left much of the scandal shrouded in uncertainty, with earlier claims now harder to substantiate. Though arson was widely suspected, no conclusive evidence was ever found and no arrests were made. Amid these challenges, Kenya took a significant step forward by enacting the Proceeds of Crime and Anti-Money Laundering Act in 2009, coming into effect in June 2010. The law aimed to prevent, detect, and punish money laundering, establishing a framework that had long been missing during Charterhouse Bank's peak operation.
Okay.
By 2010,
in operation for at least 10 years. At least.
Frustrations among Charterhouse Bank's depositors was at an all-time high. Yatta MP Charles Kilonzo joined 35 angry customers in petitioning Parliament to reopen the bank. They argued that the closure was unfair, leaving depositors unable to access their money. Parliament appeared to side with the public, highlighting the struggles of those locked out of over $3 billion in frozen deposits.
The committee says allegations leveled against the bank, including drug trafficking, could not be supported by evidence adduced before it. The committee said the bank may have violated sections of the Banking Act, just like other banks often do, but while others were let off the hook, Charterhouse Bank closed. Okemo says all government agencies that appeared before the committee absolved Charterhouse Bank of these allegations. Seemingly irate backbenchers took a swipe at U.S. Ambassador Michael Ranneberger for his continued push for closure of the bank. And the government for allegedly bowing to foreign pressure.
It was almost as if everyone had selective amnesia about the initial audit by PricewaterhouseCoopers.
Exactly.
The report revealed shocking details, including the fact that 839 accounts lacked basic documentation, like account opening forms or customer details.
Exactly.
Even as billions of shillings moved through them. Former Finance Minister Amos Kimunya firmly opposed the reopening of the bank, warning it could destabilize Kenya's financial system. U.S. Ambassador Michael Ranneberger echoed these fears, arguing that reopening the bank would harm Kenya's efforts to fight money laundering and protect its global financial reputation.
It's a problem that really does threaten the entire fabric of the country. And of course, it's related to impunity. When people launder funds, when people use container terminals to bring in goods, when people pay officials off, it's all part and parcel of this culture of impunity. So drug trafficking, corruption, culture of impunity, it's all one and the same thing, really.
In the end, the Central Bank of Kenya stood its ground, refusing to budge. Despite missing evidence, they knew too much about the bank's questionable operations to allow its return. The mysterious fire in 2006 had destroyed key evidence, making it difficult to fully uncover the extent of Charterhouse Bank's wrongdoings. This left the case marred in uncertainty. The bank's closure also exposed how heavily some businesses depended on it. Nakumatt, once a leading retail chain, suffered serious financial blows when it lost access to its accounts and loans, a factor that contributed to its eventual collapse. After a couple of years, a major announcement came on May 2021. The Central Bank of Kenya decided to liquidate Charterhouse Bank, assigning the Kenya Deposit Insurance Corporation, KDIC, to manage the process. They prioritized compensating depositors with balances up to 500,000. Yet, in 2024, the liquidation remains incomplete. Many depositors are still waiting for their money, stuck in a seemingly endless process. And that is the story of Charterhouse Bank, arguably Kenya's dirtiest bank. If you enjoyed the video, don't forget to give it a like, share your thoughts in the comment section, and subscribe for more stories from Kenya.